Good morning. Can
Good
you hear me?
morning, Sandeep. Yeah, I can hear you.
How are you?
Good. Hi, Alok. How are you?
Very well.
Hi, Girish. Hi, Sandeep.
Yeah, look.
Hey.
So what's the audience going to be like, Girish? You have a sense?
Unfortunately, I can't see that because it's on YouTube Live. So.
I know. Even we will not be able to see it.
Yeah.
Hence the question.
Yeah, okay, guys, are we ready to start?
Is Sridhar here?
Sridhar is not here yet.
So I think just in terms of coordinating between the three of us,
I think we are live.
Alok, yeah, I am the live person. Okay. From your perspective, I guess Policy Bazaar is doing a lot more than live. So, I can kind of bring the life insurance perspective to the conversations, and you can add to it, of course, and so I won't have as much to say about non-life. I only know it from outside in terms of what's happening. I was one of the first buyers of ICICI Lombard's online health insurance policy. When I had to clarify something, I called up the office, a number that they had given, and they said, "Yaar, ye online wala koi hai, iska kya karna hai?"
No.
So obviously,
That's okay.
ICICI Lombard has come a long way since then, and a lot has changed. No doubt.
How much time do we have to do it? 45 minutes or 1 hour?
It's about an hour, so we'll kind of keep some time for audience questions in the end.
Sure.
And do you want us to provide some context, or we just get into the questions right away?
The first question is kind of context providing. So I think all of you can give your perspective on to see the InsureTech space.
Fine. Okay. Got it.
So just waiting for Sridhar to join in, I guess. Okay. So they're saying start the panel, which is okay. So welcome everyone to this first panel discussion of the second day of the IIT Bombay Alumni Association FinTech Summit, brought to you in partnership with FinIQ. I'm Girish Naik. I look after service operations and technology at ICICI Lombard General Insurance. I've been in that role for the past 9 years. Before that, I spent about 19 years with ICICI Bank, working across a variety of roles. So the topic of discussion today is InsureTech, and we've got a great panel with us. So let me begin by doing the introductions. So first up, we have Alok Bansal. Alok, welcome. Alok is the whole-time director and CFO of PB Fintech Limited, which owns India's leading InsureTech brand, PolicyBazaar.com, and also the leading lending marketplace, PaisaBazaar.com. He heads various functions, including corporate finance and controllership, tax, treasury, strategic planning, and analytics. Prior to joining PolicyBazaar.com, Alok has worked in various cross-functional leadership roles in Mahindra & Mahindra, iGate Global Solutions, and GE. He was recognized as one of the top 100 CFOs in the country by CFO Magazine India in 2016. Alok has special interest in science and technology, economic empowerment, education, and civil rights. Welcome, Alok.
Thank you, Girish.
Next up, we have Sandeep Asthana. Sandeep is the India country head of Sunlife Financial, which is a leading international provider of protection and wealth accumulation products headquartered in Canada. In his role here, Sandeep manages the interests of Sunlife Financial's India businesses, which is Aditya Birla Sun Life Insurance Company Limited and Aditya Birla Sun Life Asset Management Company Limited. Sandeep is a chemical engineer from IIT Mumbai and MBA from IIM Lucknow. Sandeep started his career with Unit Trust of India in 1993 and was closely involved with its plans for entry into life insurance and pensions. He joined Zurich Financial Services in 2000 and headed the life insurance planning team. In 2003, Sandeep joined RGA, a leading US-based life and health reinsurer, and built the business in India to make it the leading reinsurance player in India. Prior to joining Sun Life in 2011, Sandeep was managing director of RGA Services India Private Limited. So welcome, Sandeep.
Hi. Hello, everyone.
Hi. Our third panelist will be joining us shortly. I'll go to the introduction anyway. So Sridhar Subbaraman is the owner and managing director of Gulf Oasis Insurance Brokers, which serves as a composite insurance broker located in Dubai, UAE. Sridhar was elected managing director in 2014 and is approved by the Insurance Authority of UAE. Prior to Gulf Oasis, Sridhar was also co-founder and served as general manager of Ernest Insurance Brokers LLC, also a composite insurance broker located in Dubai. Sridhar brings over 2 decades of experience in insurance and risk management and was the youngest independent broker owner in UAE in 2004. He's an active member of India Business and Professional Council UAE chapter. He's also a life member of the Insurance Institute of India. Sridhar holds a bachelor's degree in administration from Annamalai University and is a fellow of the Insurance Institute of India, Mumbai. So we'll wait for him to join. As we're waiting for Sridhar, I think it's also great if you can just share the context of today's this InsureTech space and how each one of you perceives the InsureTech space. Because insurance landscape, as you know, and it's an industry which is heavily reliant on channel partners. You have dealers, agents, brokers, and then it's a very heavily distribution-led industry. So how do you see this space evolving from a digital perspective? And Alok, you want to go first?
Yeah, sure. So, see, I think the industry has come a long way over the last 2 decades, if you ask me honestly, because the private companies started operating around early part of 2000s, and there were large incumbents in both life and general insurance, mostly controlled by the government. But the way industry has progressed, whether it is looking at the new product creation today or whether we are looking at the use of technology, everything points in the right direction. Now, when it comes to the different models, I see the whole InsureTech as basically 4 things only, nothing more. So the first one is where, you know, the product is the hero, where the customer is thinking about the product, or the main product sold is about insurance. So whether we are talking about health insurance, life insurance, home insurance, anything, but it is the product which is being sold. So when customers think about insurance, they are thinking about this product. You can be a manufacturer, you can be a distributor, you can be the insurance player, but you are somewhere dealing with the core product of insurance. The second part is where the product is a byproduct. Basically, it's an embedded product, a bundled product. So even the first year car insurance in some form is bundled product. A lot of times when you go to some of the portals or apps where you end up buying an air ticket, mobile phone, you may see another tick box where because of the tick box, you may end up buying some product. Now, the aim is not to buy that product. The aim is to buy the core product, which is different from insurance, and insurance becomes a bundled product along with that. Again, you can be an insurance company, you can be someone who is helping platforms come up with these product concepts, or you can be the platform itself. In such products, usually because the platform which controls the consumer interaction actually is able to auction the business, you basically see that most of the profitability belongs to that platform. What is also important to note is that some of these products actually are decent, but a lot of these products have very low claim ratio, which basically means that customers don't even know that they have bought this product. You know, if you're taking a cab ride and you end up paying 1 rupee and 0 claims ever, it doesn't really mean that you have bought an insurance product. It's just something you've paid for, but you don't even know a lot of times. The third one is where you're saying, okay, let's not focus on either the manufacturers or the customers, but let's focus on the distributor who is selling this product today, which is what in today's parlance is called POSP models, where you have appointed point of sale person who anyways knows some customer who has a need, and this POSP person gets use of your technology and make their life a little easier in terms of running around and offering a much wider choice of products to the customers. Uh, Again, typically in such a scenario of POSP, the product being sold exactly will be same as what they were sold earlier. So there is no product innovation per se usually. And the fourth one is where you are looking at the service levels, whether you are helping insurance companies with tech or we are working with customer directly for their claim support, but you are working on some service. So these are the four different parts where any insurance player will have to fit in. Now there will be players who may fit in into more than one category, but broadly, this is the only landscape of how the whole insurance play is sort of evolving.
Yeah, and it's a very good perspective on the InsureTech space. So, Sandeep, you want to share your view and from maybe the life insurance perspective on the space?
Yeah, thanks a lot, Girish. And first of all, delighted to be here as part of this panel. And thanks a lot, Alok. That was a nice context in terms of the dimensions of digital. And the limited point I would only add to that is, sometimes we think about digital as a product. Digital is a means, not the product. I mean, obviously the product is insurance, but somewhere we get so carried away by, the working digital insurance that there's nothing like a digital insurance. It's effectively insurance that is facilitated through digital means. In the life insurance context, and which is further to Alok's first point, is that product is the hero. To insurance, life insurance as a product is, as they say, is bought and not sold. Is sold and not bought, because nobody wakes up in the morning and says, I want some term life cover, or I want some life guaranteed product, or some unit linked insurance plan. And the client has to be convinced about buying this product, and the process is quite complex. Of course, policy bazaars themselves have done a fantastic job of simplifying the process, and the life insurance companies, of course, have done a great job in simplifying the process. And to that extent, I think there is a lot of digital innovation that's happened in the process to make the process of buying, one at a level of selling, which is kind of the distributor, but also for the client, the process of buying a lot easier. And a lot of work has gone behind that to make it happen. And the entire value chain, there is still a lot that companies are working on. The life insurers are working on, and players like Alok are working on. And there is still a lot to be done there, no doubt. In the process, we sometimes perhaps feel that, oh, life insurance not that great, or life insurance not doing enough. But let me tell you, India is perhaps the most happening InsureTech space in the world. The kind of developments that are taking place in India, and I can speak from my experience of operations of Sunlife in various countries around the world, is that I think India is the most vibrant InsureTech fintech space. And it is, of course, in some sense, catalyzed by a lot of things. One, of course, just the availability of digital and InsureTech ecosystems. The second is desire of the companies themselves to grow. A very robust facilitation around payments, around the UIDAI, the CIBIL, and all of that, which is making it a lot easier to do checks on individuals. And that is making it easier and relatively hassle-free for the clients, because otherwise, if clients come in and say, first you have to give them your IT returns, then you have to tell them, your bank statements for the past 1 year and whatnot. Companies have figured out over time how to make that process relatively hassle-free. But there are a lot of available data points in the ecosystem that have definitely made it a lot easier for companies to take risks on individuals. And those ecosystems, when we look around in the rest of the world, are not as easily available, interestingly. So I think we are in a very, very vibrant digital ecosystem in India. And there's still a lot to be done. So, where we are, I think we have made a lot of progress, as Alok said, over the last 20 years. But the next 20 years are also going to be bright from a digital means for facilitating the growth of insurance in India.
Please, I'll just come in here for one thing.
Yeah,
Sandeep mentioned some very, very good points around digital. See, the motivation for digital, typically, if you look at any vertical, has to be either choice, convenience, or speed. Unfortunately, for some reason, digital has become more of a playground for deal hunting. And that's where the motivations, somewhere from consumer perspective, sometimes get misaligned. But if you look at the real value of what the digital brings in terms of uh, how do you use tech to make the life easy, or buying process easy, or claim process easy, or anything of that sort, or how do you look at the different data sources and again use that to understand the risk better. That's the real value that digital can bring to the whole value chain of insurance. See, it's a very unique product. First of all, insurance is a pure digital product because there is no physical good to be transported, right?
Yeah.
So it is totally conducive for a digital journey. Second, this is a product which requires some research, usually. So this is not a product which is going to give you instant gratification. You have to spend some time. You have to go through the journey. You have to understand the options available. Everyone typically represents a unique risk. So ideally, insurance should be about segment of one. Now, we are very, 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 very far from segment of one. But if you can create micro segments of homogeneous risk, you can give a better product or risk coverage to that particular micro segment. And all said and done, the most unique thing about insurance is the best use case of this product is if you never use the product. So, it's a very unique industry from that perspective.
Yeah, true. That's something that we all struggle with, right? I mean, once the person buys the insurance, and especially coming from the general insurance side, so I see when the person buys the insurance and hopefully doesn't make any claim, the only time you see the customer again is when renewal comes in, and really there's no point of engagement anywhere in the journey. Unlike for a bank where you have transactions and you almost interact with your bank nowadays, given the digital payment space, on a daily basis. So it's a far different space, though adjacent, but a very far different space.
I'll just add one more perspective, and this is something that I learned in working in life insurance and working in the reinsurance space. Is that in a bank, if you go to take a loan from a bank, right, the bank is evaluating you, right, making sure that you have all the right credentials and credit and all of that, right? The client doesn't care. He's just looking at one data point, which is in some sense interest rates, maybe convenience in terms of you're not asking to as much. When the client is wanting to make a deposit in the bank, right, the bank in some sense, of course, there are now these anti-money laundering and all of that, but the bank doesn't as much evaluate the customer, but the customer does evaluate the bank. Will it be around in 5 years time? Is it giving me the best rates? Am I getting the best service and all of that? Now look at life insurance as a space where both these interactions are happening at the same time. And that's what makes it much more complex. Now, here is an individual who says that I want to save money. I'm ready to give you this, whatever, 50,000 rupees as premium. And the life insurance company says, hold on. I need to ask you a lot of questions before I take this money from you, right? So the loan process and the deposit process is happening at the same time. And the more we can make it easier, I think the spread of insurance and the penetration of insurance can expand dramatically if we can reduce the friction that happens in both these simultaneous transactions. And there, of course, organizations like Policy Bazaar facilitate one side of it, and insurance companies have to facilitate the other side of it in terms of reducing. And if the friction is reduced in the system, and as Alok said, if we have convenience and facilitation, actually digital is a means for growth of insurance in India, and that to a certain extent applies to non-life as well, health for sure, non-life in general as well.
Yeah, very, very interesting perspective, Sandeep. Alok, coming to Policy Bazaar being India's largest online marketplace, you still recently made some moves into the offline space, right? So how do you see this evolving over a period of time? I mean, everyone else is offline first and then kind of tries to do digital. So how do you see this evolving over a period of time? whereas you kind of moving in the opposite direction. So just talk something about that.
Sure, Greece. See, when we talk about offline, in our case, offline is actually nothing but appointments model. What really started to happen uh, since we deal with all verticals within insurance, for some of the verticals which have little complicated product like health and savings, there were customers who had more comfort in having a face-to-face meeting after having a chat with us. So, if you look at our product lines, something like two-wheeler, we don't even call any customer and whatever tens of thousands of customers buy every day. Motor, you do end up talking to few of them. Term, again, you end up talking to few of them. But health and savings, almost everyone wants to talk. And yes, the talk time has come down over years, but no one will buy, or very, 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 very few people will buy without talking. So this sort of became an extension of the same approach where we said, okay, you have website, you have app, you have call center, you have video calls, and now you have an option of asking us to meet you as per your convenience over and above these things. And we found that since we've already spent the marketing money, this sort of helps us increase the conversion. See, as a digital business, you're focusing on both top of the funnel increase and the conversion increase. Now, at some point, you can't really just go off to top of the funnel all the time, because that includes, that basically means that you end up spending more and more marketing money. And, we did some studies internally, and we saw that if you look at, say, motor is the simplest example, where everyone who comes to us technically ends up buying a policy, and only maybe 25 to 30% buy through us. So it means there's a leakage. People are going out and buying from some other option out there. Similarly, in health, number of people who end up buying through us versus all the people who buy within first 90 days of coming to Policy Bazaar, that number will be again between 25 to 30%. So if we can give option of customers where if they want to meet us, they can ask us that, can I come somewhere to your office, or can you send someone to my home? And if we increase our conversion, why not? The support is still given by the same online team. Everything in the process happens in the online way only. The payment is happening online only. It's just that, just to give that little bit extra comfort. And one more thing that we realized was a lot of these interactions are very, long interaction in terms of total talk time. So, if suppose we're talking about 30 minutes, 40 minutes, 50 minutes interaction, usually customers are more comfortable talking in their local language. And through our Gurgaon center, and then we had a Mumbai center also, most of the time we'll end up talking to them, starting with English, but reverting to Hindi very, very soon. And knowing how diverse India is, somewhere customers did not have that level of comfort in not being able to converse in their local language. And this appointments model is helping us bridge that gap as well, where the person who's going to meet obviously is a local person. So he talks in not only your language, but also your slang. And you get a little bit of more comfort that, yes, there is a large corporate behind this. And I know someone who is in my city who can help me out with not only buying, but even at the time of claim.
Absolutely. Very, very, very rightly said. And especially for the two products, I can tell you for health, definitely the buying process is almost never completed completely online. You really need to talk to the customer, explain the product, and yeah, you're right. The conversations could go on for 25-30 minutes as well. So it does make sense to kind of have that face-to-face interaction also to kind of make that sale complete.
And these also,
and if I'm
in terms of protection, sorry, I just add one more thing. In terms of protection products, typically customers come to you because there's a trigger. But there's always a tendency of delaying the decision because it requires you to think about negative events of life. So you may say, okay, there's some festival or there's some function and there's some other stuff happening, and I'll buy next month, and then you forget about it. Having that interaction sometimes is very helpful, because once you have spent that half an hour talking to someone, whether it's physically or whether it is through call center, that small nudge can be provided. That, sir, that you have now understood about the product, can you now make the payment? And that's as a human being, since you have spent that much half an hour talking to someone, you build that small rapport, and that payment is possibly happening because of that. So yeah, it's a tough category.
True.
Yeah. Now, if I may add to that, I think, I agree with you, Alok. One is the negativity around it. So, there is an internal bias among people to think about a product like this. That's one. The second is the complexity, right? So, uh, people are always more scared of making the wrong choice, right, rather than making a choice. So the more complex the product, the more choices in front of people, the default behavior of individuals is not to make a choice, because they're always concerned about, oh, have I made the right choice? And so in the process, the choice gets never made. And to that extent, I think that is where, to a certain extent, advice or facilitation is very, very important to help people get over that hurdle, which sometimes is not possible through just impersonal digital means, or even through call centers. It's just sitting down with an individual. It's helping people psychologically getting over that hurdle of saying that, giving them the comfort that you're making a good choice. And chopping around too much may not really help, as Alok said. And I think Policy Bazaar's ads were kind of nudging people to saying that, don't delay, don't defer, right? Make the choice, because you never know when you will need insurance. You can't predict that today. And I think to a certain extent, there is a sense of societal purpose for insurance to say that, you will only realize the value of the product when, unfortunately, it might be too late. It's almost like somebody said that, the value of I don't want to recognize the value of a seat belt, right? Which is that, when an accident happens, suddenly I realized I haven't put on a seat belt. So insurance is a bit like that, but to help people psychologically to, kind of, one, think about some negative consequences, or, there is a negative connotation around the product. And second is, it's a complex product also, and people don't understand the terminologies that we use. And how much ever we try and simplify that, there is the legal aspect of, we can't really oversimplify things. And so it's always a challenge to communicate the value of the product. And sometimes individuals are needed. So face to face is needed to answer questions, and just to get that comfort that, uh, it's the right thing to do.
Sure. So, Sandeep, from a life insurance perspective, how do you see the penetration of InsureTechs in the distribution perspective, especially?
Right. So I think there is one model, which is, of course, that Policy Bazaar is spearheading, and I think they're moving into the second version as well, which the life insurance companies would rather prefer to have for themselves. But notwithstanding that, I think there are two broad categories. I would say that, one, a relatively simple product, which is, it's like buying an airline ticket. As long as there is a bit of a need, you go there and you search for the best deal, right? So a digital platform like Policy Bazaar helps with that. If I go to one insurance company, I'm not sure whether I'm getting the best deal. So I go to somebody who can help me make a choice of the best deal. But it's usually a single variable product, which is that, the only thing largely varying about that product is the price. Um, and that definitely is facilitated through purely online, digitally facilitated process. And here the insurance companies then are wanting to make sure that at the back end, they have streamlined the process. So the buying process is relatively seamless for the client, so that we're not asking too many questions for too much information. So that's one category of the product. The second category of the product is, which is much more front loaded, as we discussed earlier. And that is where I think distribution comes into play. There are several elements to that as well, because distribution is not easy. I think what Policy Bazaar and Alok alluded to, what they're doing is that they are in some sense generating leads, and they're saying that, well, we need some physical means to convert those leads into clients, right? In an insurance company context, for the advisor, the agent, the distributor, generating leads is the most challenging part. Of course, the banks have clients, and through that they generate leads. And then comes the whole value chain of converting the product. For the distributor, it would become very helpful if they get a lead. they are able to convert that lead relatively quickly. So the process should be seamless. And to that extent, there is a lot of work that companies are doing, and which is where even today's, for example, Aditya Birla Sun Life Insurance did a pre-approved sum assured kind of a plan, which was around COVID, saying that they used back-end analytics, right, to say that we have an existing client base. And to that client base, we can offer additional insurance cover. And that, in some sense, the distributors liked the idea. It did still require some nudge with the distributors so that they were assured that when they go to the client with this pre-approved sum assured, the client will not face hassles in getting the policy. That's what they're usually concerned about, right? Because in some sense, they want to keep the process for the client very smooth. So the company did a lot of analytics at the background and gave assurance to the advisors. And when the advisors saw that this is actually converting fairly quickly for their clients and of course for themselves, that made their acceptance of this product or of this offer much higher. And that's the power of, in some sense, the digital, right? So the analytics that went into it, in looking at data sources around, which is Sybil or the UIDAI and all of the other databases. There is an emerging claims database as well, which is helpful. In some of the countries, they have this. For example, if a client is buying too much insurance, that's a bad sign. That's probably a sign that they've recently bought. In India, we don't yet have that, but hopefully we'll get there because IDEA is working on some of these registries and databases. And the more we get that back end within the limits of obviously privacy issues and all of that, the more we can triangulate some of that information using analytics, using digital means, and of course, over time experience that what works, what doesn't, which data points are correlated with high claims, which data points are not. That all that work and all that data facilitation is going to make a life a lot easier for distributors to convert prospecting into business. And clients themselves, of course, have to work towards facilitating and making sure that the distributors are ready, because the product category is quite complex. So there is a lot of companies in India that are now going into digital learning, digital support for the advisors, which is almost available, saying that, oh, client asked me this question about this product, maybe I'm missing, maybe I didn't don't remember it. But there's now online support available for the advisors to look good, and also for them, themselves, but also look good with the client and also address all the concerns of the client then and there, rather than saying, I'll come back to you maybe after a day or two. The final one which is happening is that, and this of course will be some time, but there is a lot of work going on among companies to say that, can we do it face to face but online? So not having to meet, because travel is like, in a city like Mumbai or a city like Delhi and others, travel can be a bit of a pain. In Bangalore, for example. So is it possible, saying that, I know we have comfort, we can talk over a video and conclude the process. And there's a lot of work just to make that whole process much more engaging. There's a lot of work that's happening. Companies are working on it. There's still hesitation and resistance, both at the distributor level as well as at the client level. COVID has set that into motion, which is that people are getting comfortable, just like we are here having a whole conference online. That is translating also into clients getting comfortable. So there will be this third piece which will emerge, which is that basically a client interaction happening digitally, still face to face, but digitally. It's not just about impersonal, going online, buying through a chat bot and all of that, but really, let's come on and get on a call and talk about this, and we can help you conclude a product which is going to be long term extremely valuable for you.
That's an interesting perspective. I just want to move the conversation to the next, which I had, which is on the character of the InsureTech space in India. And if you look at the InsureTech space, again, the way to look at it is in the lens I'm using is the funding that goes into this. That's the only publicly available lens, because there may be lots of InsureTechs out there, but we kind of come to know the ones who got funded. So almost 95% plus of the funding in InsureTech in India has been in the distribution side. If you look at worldwide numbers, this will be around about 60 to 65% on distribution side, and then there'll be rest 35-40%, which is into other areas like risk management and operations, so on and so forth. However, India, it's still very much on the upstream part, which is a distribution focused funding. And question to both of you, your take on why this is so, and do you see this kind of changing as the industry evolves? Alok, do you want to go first?
Yeah. So see, basically, Girish, if we look at the total funding, actually, all the insurance companies have a foreign partner. Most of them have foreign partner, and that is the sort of funding which has come in. It's not come through a PE fund, and it may be not something which gets captured by the media to that extent. But insurance, from the manufacturer perspective, is a balance sheet play, and the sort of solvency requirements and all, the capital which comes in, whether it is Indian money or whether it's foreign money, eventually it is a huge amount of capital which has to be deployed. Distribution is usually a OPEX game where, yes, you end up becoming more visible because of the nature of the business. And sometimes you have those PE funds which are more interested into distribution, because the scale up of distribution can happen much faster than what can happen for an insurance company alone, usually. But having said that, there's also a regulatory bit where the PE money is not as welcomed into insurance companies as it is easily welcomed into a distribution channel. You don't have to go through that many multiple levels of approvals when the money is coming into distribution. So yeah, there are multiple reasons why distributor side funding has been more in news, but I don't think the number would be this lopsided as 95%. You know, yes, we had Digit and Echo as two of the newer brands which have come out in last, say, 5, 7, 10 years. But even outside of this, if you look at the total capital deployed across manufacturers or versus distributors, manufacturers would definitely take the cake. A lot of that might be Indian money, that's all. So it may not come out as easily as a funded company. Now, when we look at the whole innovation bit, where the PE money normally goes, see, in insurance, unfortunately, a lot of times industry moves as per the requirement of the distributor. You know, look at the reality of car insurance even today. We ask only 4 questions, right? Which city you bought the car, which year you bought the car, which is the make model of the car, and did you claim last year? You know, we don't even ask how many kilometers you drive, where do you park, who drives, nothing. Basic questions, right? And this is such obvious one that anyone who is part of the industry knows that we are not really doing a risk assessment in case of a car insurance, but that's the reality. Now, tomorrow, if there's a distributor who is able to do little better because of whatever reasons, automatically they will attract some interest and funding. And for single insurance company to move the needle in a big way on such things is not very, very easy on their own. Because, you know, again, as we discussed earlier, customers are not normally going to a particular brand of insurance company on their own. So, you know, eventually, because it is a sort of a distributor dependent industry, a lot more focus goes on what the distributor want in terms of product, in terms of how do they look at the tech part. You know, now the good part is a lot of distributors like ourselves are also looking at helping companies with fraud control. You know, because somewhere the leakage which happens because of fraud or gaming of the system is also which hurts everyone. It's not just the insurance company, it hurts everyone, the whole ecosystem. And we have eventually started to work on lots and lots of tech capabilities like face recognition and all, where the frauds for our partners have come down drastically. So, you know, digital means that, yes, the journey is simpler. People can come and buy, but on the other hand, you have to be also conscious of the fact that a person doesn't get the wrong product or overpays because there is a segment of customers who are trying to game the system. Right. So when we look at car insurance sort of product and the way we work with our partners, we capture a huge amount of data when the customer is on the website. And over years, we have built models where we correlate that with the claim behavior of the customers. And then we share that intelligence back with our partners to see if they would want to utilize some of that. And the reality is that on OD discounting, we have figured out segments where you can even give 90% discounting and still be profitable. Whereas there are some segments where you do not want to touch even a 0% discounting because you know that claim certainty is almost there because of intention, because of whatever reasons. And you don't want to even touch that segment at all. And a lot of companies are working with us. We actually have a full actuary team who are working with insurance company actuaries to look at these sort of data points and linear models. So everyone uses GLM. So we also use GLM modeling along with our partners to look at what segments, what is the right sort of pricing. But the point is, we still do not ask questions beyond what a normal underwriting process requires us to ask. We are capturing some passive data and we are trying to see if that passive data has some correlation. That's all.
What you're saying is that while you might be capturing a lot more data than what you use for the pricing, there is no avenue to use it in pricing when the other companies are not using it. So it's the
no, we have to eventually go with insurance company, right? Because the product belongs to insurance company. So we can share our findings, but the call has to be finally from the insurance company perspective that, okay, are they comfortable or not? And some of these data points are not very obvious ones in terms of how would that have a linkage directly with the claim behavior. Some of them are very, very simple. I mean, just to give an example, if suppose a customer has not declared diabetes while talking to us in health insurance, but they were talking about insulin, we are able to capture that during the call and take it out and share that with our partners if they want. And if they want to use it for pricing, why not? But the point is, not every company will be ready to use that sort of input.
Sure. Sandeep, you want to give your perspective on this?
No, I think that's a fairly comprehensive overview from Alok. And I would only add that, yes, I think it's the larger point that you made, Girish, is the visible part of it. But there's a lot of creative work that's happening by relatively small groups of people on analytics, on tapping databases, on converting the data points available in some of these databases into something usable from a insurance context. Yes, it's not that visible, but it's just as impactful because a lot of that work is helping make the process easier. There's a lot of investment and work that is happening on RPA, the robotic process automation, which again is helping make turnaround so much faster. Um, you know, so and I think there is still some work to be done on the claim side, no doubt, which is that because the moment of truth for the client is when the claim occurs, and there is work, but at least in the life insurance context, it requires a lot more data because this is very actuarial driven. But companies are experimenting, trying to figure out, saying that outside of what the actuarial process might suggest, are there means or data points that we can kind of utilize and triangulate to make it easier for us to decide which claims can be paid almost instantly. And we do look forward to maybe in another 3 to 5 years, will there be claims even up to, let's say, 1 crore or something that can be paid almost instantly once the claims intimation is received. But at this stage, we are not there, of course. There is, I think, the work that companies are doing, gathering data, gathering experience, all of that will eventually collate. I think COVID has, I think, I would say, challenged companies, but also made data gathering an essential aspect of the business, which perhaps in the past was, is there, but not from an analysis perspective, but more from a client servicing perspective. But I think now clients will be spending more. I think there has been some challenges with reinsurers and all of that. So that has led the companies to ask much more about saying that, what do we do about core insurance and analysis of the core business? And I'm so glad to hear what Alok is talking about, because eventually, if we allow leakages in the system, if we allow frauds in the system, it affects everyone, because then, companies, the manufacturers will clam up right? They will make the process more tighter. They will make it more difficult to sell the product, and eventually they are at risk. So it's great to see distributors and manufacturers working eventually hand in hand, because everybody has to make a reasonable amount of money here to remain in the system. So the client, of course, has to get value out of it, but then the distributor and the manufacturer also need to get value out of it. And if there are a few errant customers, clients, or groups of people who are trying to game the system, that needs to be nipped in the bud early enough. Otherwise, everybody suffers eventually, or the clients who don't do it, the distributors as well as the manufacturers. That's not a good space to be in.
Thanks for that, Sandeep. Alok, I'll just pick up something you mentioned up at the answer to your first question, this how you're seeing the space. And you mentioned the space of bundled products out there, right? Where you just, I mean, it's the buying flow is of some other product, and you have the small tick out there which adds it, like Ola cab ride, you add a 1 rupee insurance or 2 rupee insurance to it, and eventually there's no claim. I mean, right? Most of them, I mean, the claim ratio is very low. So going forward, how do you see that the market for such products evolving? Because eventually what happens, I mean, if once the manufacturer of the other product, which, I mean, the Ola ride or whoever is the non-insurance product on which you're piggybacking, understands the claim behavior, then that's something, it's assurance that someone can offer themselves, right? Does the insurance industry then have any part to play out there? It becomes a different, it just goes off to the other side. So how do you see that space actually evolving?
See, this is an important category, Girish. And the easiest way to answer this is, would you as a consumer buy that product knowingly? Some bundled products are important. Like as I mentioned earlier, when you buy a new car, you end up buying a car insurance, right? It's compulsory, but it's also important.
Yeah.
Similarly, if you are buying a house, having a house insurance and a term life insurance linked to the loan amount is something which is very useful for the customer, even if they may not realize the value. But there are lots and lots of products where customers are not even aware they bought that product, first of all. Secondly, there is no real need of that cover. And the process itself, in terms of going through the whole claim process, and basically what do? You just say, okay, I'll make the buying so easy that customers will end up buying without worrying about whether the product is important or not, how would the claim work. The whole processing around that product itself has not been designed per se. And that's where the problem is, because a lot of those products eventually mean that customers at some point will realize that they have paid for something which they never wanted to. The reality is that if you look at most of the investor pitch decks of digital companies today, 90% of them on the last slide will say we want to make money by lending or insurance. So that's the only way they see that money can be made. Otherwise, they all end up losing money all the time. So if you are delivering grocery, or if you are doing something very, very different, and you say, now I want to also give a loan and I also want to give insurance, it becomes very, very challenging. And customers are not looking for that product. There is no need of that product. So yeah, it's okay. There will be platforms will try and do that. When I pay my kids' school fee, every time I see that box that do you want to pay that 249 rupees per month extra for some insurance product linked to that school fee or some child product. I don't know what. But now the good part is regulator has been very, very clear that it cannot be pre-ticked. And that itself is a very big, respite for the customers, because if it's pre-ticked, the conversion is as high as 20% versus less than 1% when customer has to choose. Now, the one you mentioned about the cab ride, there it was not a choice given to the customer. And that's why the numbers were very high. And you're right. I don't recall even a single claim would have happened. Right. So, that is something which brings, I would say, wrong name to the whole industry. And somewhere as an industry, we have to be very clear that we would not support such initiatives or bring it out, whether it's media or whether it's regulators, that something of this sort is happening. Because, it's the same customer If the trust goes away from the industry, everyone suffers. Everyone suffers. The claim process, as Sandeep was mentioning, itself is a black box. Even for someone who is part of the industry like three of us, we would shudder to go through the claim process. And we'll have to reach out to someone that we know to help out with the whole, not only paperwork, but also each and every aspect is defined in such a way that customers really, really get afraid of going through the claim process. And, as an industry, I think the focus should be getting the trust back from the customers if we have to look at medium to long-term growth of the industry.
True. I mean, that's the key, right, for the insurance industry, getting the customers' trust, because the past experience with claims has scarred so many customers that generally the entire industry is painted with a bad brush. So
yeah, no, they are good products. They are very, very useful products, very, very good products, which, hand on heart, Girish, this is the industry which touches people's life after education and healthcare, maybe in the biggest possible manner. And when you see someone known go through the whole process of claim and how does that impact their family, you feel so grateful to be part of this industry, especially something like, say, term insurance and all, where protection products, families will go back by 1 or 2 generations if they don't have these products, because for the middle class India, there is no backup plan from the financial risk which comes from death, disease, or disability. And that's where I think someone like us, and even Sandeep earlier in his avatar with the RGA and all, had been focusing a lot in terms of trying to educate the customers that, that support system we used to have from the social perspective, where, people used to be in a joint family and a smaller town. Those sort of things have changed a lot for a huge number of people, where people have moved to urban centers. There's almost no backup available now. So people have to start thinking as soon as they have a family and a career, that what if some unfortunate event happens, how will my family be able to manage? Now, I think it's a journey. It won't happen overnight. But somewhere, as I said, if customers start to trust that this is the right industry which can help me with such products, it will not only be good for the industry, obviously it will be good for the industry, but also generally from the social support perspective, because we don't have any government support, right? Middle class guy doesn't want to go to a government hospital, doesn't want to send their kids to government schools, right? They are very aspirational. But what happens if you do not have that support, which an insurance product is the only product which can give you?
Absolutely. I mean, that's a very, very pertinent point to bring up, because generally we find that hospitalization is one of the single biggest reasons why people slip back, families slip back below the poverty line. And on the flip side, you have only 1% penetration of health insurance. So that's a reality we live with today, and we really need to kind of make sure that people do buy health insurance. They buy health insurance for protection. That's something which is absolutely essential given the rising costs of hospitalization. And same is the case with term covers for ensuring protection for your family. So just looking into the future, what are the technologies that you see you see disrupting the insurance ecosystem in the next, say, 2 to 3 years? Technology, I can't look at a further horizon. I mean,
Let's see, there are 3-4 areas. One area is how do you understand the risk better and create a better product for the customer, or for the risk, not really for the customer, right? Now, eventually, yes, we are moving towards that direction, where some customers may say, okay, I'm willing to share more data. And some of these data points are becoming publicly available, as Sandeep had mentioned earlier. As a company, we are also looking at different data sources of, say, account aggregator database, or the whole NDHM initiative through the Health Locker. In fact, we launched India's first Health Locker for that purpose itself. And you will figure out that over time, because India is moving very, very fast toward digitization of a lot of these, public domain databases where with customer consent, you are able to look at risk much more granularly. And automatically, by definition itself, if a customer is agreeing to share some data with you, it means that that customer is confident that data is good. So automatic bias will start to come into the product creation, and you will have to start to see that how the product evolves for the right risk of that customer. Uh, Sandeep can also give example about the whole term insurance pricing over last 10 years. From 13 to 18, the prices kept on coming down till the time the focus was mostly distribution through online. Once the same product was made available offline, early claim data showed very, very different sort of growth, and the prices have gone up at least 3-4 times in last couple of years. Uh, so that's the one part, the product, how the product will evolve. The second is how do you use the tech to, one, control the fraud, and second, make the buying process easy. There are very simple things which industry has started to adopt, like Teddy underwriting or video inspection of the vehicle. Now, just 5-7 years back, no one could have thought that this will become mainstream. And today, even the claims are being paid using that video inspection, right? And the last part would be how do you use the tech to give a superior claim experience and a smooth claim experience. For something as simple as a saving product, taking your money back after the maturity of the product itself is such painful process today. You go to mutual fund, you give a folio number and a single page with sign, you get the money next day in your account. Look at the saving product that we have in India. Original bond paper lao se leke, what all is being asked. And getting your money back itself becomes very, very challenging, even though you have not defaulted. There is no NAV which comes out on a daily basis like MF. So, I think the industry eventually will have to move into those directions using tech. There are very, very small opportunities to become more efficient in the process for the companies also. Just to give an example, I usually was always baffled with the fact that earlier when medical physical test for health insurance was required, you sold the policy online, but then for setting up the medical test, you still have a call center which calls the customer. Why can't we ask that online itself and reduce the whole cost for the company? So the admin cost for any company is a very, very big cost. Typically admin cost should be in very low single digits for any company, because it's a pure digital product. Why do you need such a large office in a very posh location and all that stuff? And but the reality is admin cost, my guess is for most of the company will be above 10%. And there's huge amount of opportunity to use tech to cut that down and become more efficient. Yes, you have, if your underwriting is better, you are more profitable. If your tech processes are better, you are more profitable. You can get more customers to come to you. But even on such things where internally you can improve your processes so much that you can cut down 200 or 400 basis points, that will always be very, very helpful for the companies.
Sandeep, your thoughts? What do you see?
Yeah, no, I think I'll just add to what Alok mentioned. I think a couple of areas that come to mind. I mean, when you say futuristic, I was thinking in terms of, how it might be, driving in a Tesla and taking care of my insurance cover and all of that, right? Kind of, that kind of scenario. But clearly, I think one area is voice. A lot of development taking place there. And voice has several elements to it. One, of course, is detection, which, like we using facial recognition kind of technology, I think voice and voice-related technologies could add to already the good work that's happened. At two levels. One, in terms of, again, helping companies analyze the risk. But the second is, who knows, we might be talking to a online or to a robo advisor kind of a situation. And many of which is what Alok said, is that it's just getting people over the line, right? There might still be complex products, maybe wealth planning, financial planning, and all of that, which is a much more involved work. But there will come categories of products that just requires that psychological nudge to make sure that, the person is at least gets comfort that he or she is not making the wrong choice. So I think voice is an area that I think the technology is evolving rapidly, and that could be an area. And the other is, I think, AI ML, which is to analyze tons and tons of data. I think work is already happening, but hopefully, it's still an area that is dominated by actuaries. Getting comfort around saying a machine is telling you that certain things that have happened behind, when you don't know the model by which the machine has arrived at the conclusion, saying that this variable or that variable is linked to the outcomes of claims, and hence the pricing can be altered or underwriting can be changed, and or a claim can be paid, for example. But notwithstanding that, I think once people get comfortable with that kind of analysis that's done by a machine, that can start altering a lot of things. Around that, the related space around all of this remains regulations. And regulations tend to kind of lag behind, understandably so at some level. But unless regulations keep pace, even if they're lagging behind, unless they keep pace with some of the developments that are taking place, right? In the sense that, oh no, I need a basis for your pricing, right? So you have to log a basis for the pricing. And which comes back to Alok's point about segment of one. Now, things like that, how do you kind of go out and actually customize an offer for a client? Or, to say that this analysis is basically done by kind of a faceless machine, not by an individual who has, training and actuarial and all of that. All those are important inputs, but at the edge, can the data be nudged, and can the offer be nudged? All of those things overall, I think regulations will hopefully keep pace. If they do, then I think we will see more and more growth in application of some of the developments that are already on in technology, to develop it. I mean, tomorrow, who knows, somebody might ask you to just connect one lead to your head and say that, okay, fine, you can get so much insurance cover. Like Alok said, if the clients are willing to provide information, they trust themselves, in the sense of knowing that I am telling the truth, that the company figure out in their way as to whatever I'm doing, whatever I'm saying is correct. Yeah, I think a lot of developments could take place. I mean, I'm not using the word Neuralink. I don't know in what way that might evolve or move forward, because that sounds like more a manipulative technology than an analytical technology. But notwithstanding that, there are possibilities, immense possibilities, that would help give comfort to the insurance companies or manufacturers to provide cover to clients in very quickly and instantaneously almost. So yeah, I'll stop there. Thanks.
See, somewhere it's imperative to understand. We all see ML AI sort of names thrown very easily, but eventually, what is the end game? Why do we want to get into something? Yes, technology will definitely help become more efficient. But as human beings, as senior people in our own companies, we have to be very clear what is the end objective we want to get to. Yeah. And a lot of that is not very high-end technology. I mean, yes, there is a role for technology, definitely. And some of the stuff cannot be done manually at all. But eventually, it has to have a very clear end goal of why we are trying to use a particular technology. There is a lot of low-hanging fruit still out there. Yes. Where you do not really need AI ML sort of stuff. Again, coming back to my car insurance example, which I had mentioned earlier. Today, if I drive my car only 4,000 kilometers, why should I pay for average 20,000 kilometer car driven, right? Now, that is something which is easily available as a technology across the world. But do we have the right ecosystem, motivation from the industry and motivation from the customers to adopt this? Because, even in the high-end cars, the odometer reading can be manipulated. So then how would the industry use this solution, even if it exists? So we have to look at in the context of where we are as an industry and as a country before we are able to use some of this stuff. The good part is overall, the awareness in the industry that technology can help us become much more efficient and deliver a better outcome to the customers. It's something which I have seen evolve over the last 13, 14 years. When we started in 2008, 2009, I think Lombard was the only company which was thinking about direct to the customer in a major way. But today that has become a very high focus area for everyone. And somewhere we are heading in the right direction from that perspective. But technology alone will not solve all these problems just because someone has access to a technology. No, ills of the industry will not go away just because of technology.
Yeah, I'll just add briefly to that. Is that, yeah, absolutely. I mean, I completely agree with that in the sense that, eventually I think technology has to reduce the cost and improve the convenience. And then it just starts opening up markets, right? It just starts making it easier for clients, but also more and more clients can afford insurance at some level. And that gets down to, analysis of data and everything else. I mean, I'll give a very simple example, but an example from my own personal experience. And it's an analog example, but it extends equally to digital, which is that, this was way back. You know, I was talking to my colleagues in the US, and I was saying that, protection has boomed in your markets. What facilitated this, right? I was just trying to get to understand. And they said, you know what, simply that during AIDS, because there was this AIDS epidemic in the US, every insurance company had to go through a blood test. I mean, every proposal was required a blood test because they were checking for AIDS. But then they said, "Oh, if you're checking for AIDS, we can actually check for other things as well." And it led to them looking at. Then came up smoker, non-smoker. Then came up preferred, and all of that evolved. And I said, oh, actually in India, clients are, giving blood for, even for a savings plan. And they're ready to do that. They're ready to run on a treadmill. And then I came back and started to talk to clients in the market. And one of the clients, of course, picked up the idea, and they launched Aegon Religare. They launched I Protect and the Come Insurance Lene Ki Bimari and all of that. And, and that drop in price just exploded the term market in India. Right? It was just a change that took place. But that drop in price just suddenly opened up the term market in India, which until then was not. I mean, and of course, they made it possible online, but then that extended to the preferred non-smoker and all of that to other forms of distribution as well. But it just opened up a market. Now, the limited point I'm saying is that with the data that is becoming available, and if there are analytics, there are tools that are becoming available, as long as, of course, companies get comfortable, we don't know in what form suddenly something becomes so convenient or the price drops so significantly that it opens up a segment or just kind of makes it so much easier for the client to buy. And, the market just explodes. Now, it's an analog example, but this effectively applies to the digital space as well right now, is that in terms of data is now the new blood, and we don't know what we can start to look at and analyze, and we will require analytic power, and who knows what comes up. And while I agree with Alok in terms of saying that there are so many low hanging fruits, and I completely agree with that, but who knows, there might be some of these big witches which will just shock us, surprise us, that might emerge and suddenly change the game, and we might play in India. I mean, in fact, when I did that, and within RGA world, I had a problem that people were against me, kind of saying that, no, how can this happen? And I had to convince a lot of people saying that, okay, let's start. We will limit the number of policies that we write, but let's see how it goes. And we will face that kind of challenges either from the regulator or from our markets around the world or whatever, and they'll say you're doing something really stupid. But let's see what data gives us. I look forward to being pleasantly surprised.
Yeah. Because I think we are, that's been very interesting. We're coming to the end of our time. There's one audience question which I just want a quick response so that we can. So what is the biggest obstacle for insurance startups that holds back market distribution and meaningful change? This is a question from the audience. Any one of you wants to take a shot at it?
Customers think about insurance when they wake up in the morning. So, till the time customers don't come to you, it's never going to become a scaled up business. And it doesn't just apply to insurance. I think everywhere customers have to start coming to you, and that's when the whole dynamics change.
Yeah, and just look at the amount of money that Policy Bazaar has to spend to get clients to come to them, right? So it's like he said that it's not easy to get clients comfortable clicking online and buying an insurance policy online. So it's a tough world, insurance selling. So look at other ways that you can, rather than trying to get into saying that, the direct space, direct selling space. And there are lots of opportunities available in the InsureTech space for people to, make a change, make a difference. As Alok said, if you sit down, spend time talking to people, you will discover low-hanging fruit that would surprise you, saying that, oh, how come somebody has not thought of solving this problem using data or using technology or digital, whatever.
Thanks. Thanks, Alok. Thanks, Sandeep. It's been great. It's been a lovely discussion, and I hope the audience enjoyed the discussion as much as I did moderating this panel. Thanks so much again for taking time out and joining us here today. Thanks, everyone.
Thank you.
Our pleasure.
Have a good day.
Thanks for having us over.
Right.
A wonderful discussion.
Right.
Thanks a lot, Girish. Challenging questions. Hopefully, I've learned a lot from this interaction with Alok. Thank you so much.
Thank you.
Bye-bye.